Hello, everybody. Um, Popping in to just do a quick video of what I said I was going to do. Just showing how I trade, how I look for my entries, and yeah. So let's just get into it. Quick note before I go into that portion of it. Um, my mindset on trading is that and a lot of this comes from Casper because I really connect with what he says. Um, you have to have a strategy that gives you an edge in the market, obviously. That's first and foremost. Um, but at the same time, you have a lot of people on both camps. I mean, momentum traders use a lot of intuition and other tools, as well as their intuition to read markets, take trades. Then you have mechanical traders who uh, build a strategy, set the rules, and they strictly 100% follow the rules. Win or lose doesn't matter because they just rely on the edge. Mechanical traders typically will have set profit targets um, on a risk reward basis, and that's what they trade. That's how they trade. That's how they make their profits. I'm kind of a mesh, in between the two. Yes, you need to have rules on your strategy and you need to follow those rules. But at the same time, I think, once you've been watching charts for thousands of hours, um, you need to kind of let your intuition play a part in your trading as well. Maybe not so much in your entries, but once you're in a trade, um, you need to kind of let that side out a little bit. It can save you from letting a profitable trade go back to break even or even a stop out, uh, or um, just not take a trade at all, even though your setup is telling you to. Um, so that's kind of my thoughts on that. So let's get to the charts and show you how I look to find trades. Um, I'm going to start right about here at the London. Um, so I use time-based liquidity. Uh, Displacement, price displacement, and fair value gaps, um, and market structure, which everybody should be using, um, to look for my trades. Now, I basically have two kinds of trades. I'm looking for liquidity sweeps and liquidity runs. The difference in that is, um, well, let's just use this here. This is a swing low on 15-minute chart. Um, And let me get rid of my crosshair. Just point things out a little bit. Okay, crosshair. Like, okay, two, like. So this here is, uh, this right here is a swing low. Okay. Um, when we break this low, we don't get a reversal, which would be a liquidity sweep. We actually get a harder push down, which is a liquidity run. Okay. Um, so that's the difference there. And so I'm looking for liquidity sweeps or liquidity runs. And I'm also looking for fib retracements um, after a strong displacement in the market. Okay. So those are the two trades that I'm looking for. Um, hold on just a second. Let me grab something to drink. Sorry if you got a butt shot there. Uh, so how do I find those trades? And where do I enter them at when they show up? Uh, I'm using the 15-minute chart to look for my levels. And then I typically will use the 1-minute chart for entries. There are times where I will just trade off of the 15-minute chart. Okay. Um, and Friday was one of those times. Uh, Real quick, let me go back to the 4 hour because there's a reason for this. We had this big 4 hour fair value gap here, pushed through pretty quickly, pretty hard on Thursday, and never really, this pulled back, but it didn't touch it. Um, Never really retested it. And so at the start of the London session, we started to pull back. Now, when I get up and I get on the computer, again, I said I use time-based liquidity. Well, what is that? It is the highs and lows of certain sections of time in the market. Okay. Um, and that starts at obviously the market open at 6 p.m. the previous day. And so the first section of time that I use is 6 p.m. to midnight. So this is my 6 p.m. candle. So from between 6 p.m. and midnight, I want to look for the high and the low. Well, I know the 6 p.m. candle is going to be the low because everything else is above it. Um, so I just want to take a line and mark the low of the 6 p.m. candle and put that there. Okay. Then I look, come in and look for midnight. I do the same thing, uh, which is here. So the high between 6 p.m. and midnight was this candle right here. So I'm going to place a line right there. Okay. That's my first session. And then from midnight uh, to 6 a.m. Okay. So if I find the 6 a.m. candle, which is this one right here, um, and I know this is the midnight candle, so the high between here and here is going to be the London open candle at 3 a.m., 2:45 to 3 a.m. Okay. And then the low of that session is going to be the close of the 6 a.m. candle. Okay. Um, well, this is 6 a.m. to 6:15, so the low of this session is going to be right here. Okay. Because this candle started here at 6 a.m. Um, so this is going to be the low of that session. So I'm going to take my marker and mark off the low, and I'm going to mark off the high. From 6 a.m., we start moving at 90-minute increments. So from 6 a.m. to 7:30 is my next liquidity that time-based liquidity levels that I'm looking for. So if I go from 6 a.m. to the 7:15 candle, um, that ends the session at 7:30, and the 7:30 candle starts. And so I know this is the high of, or the low of the 6 a.m. session. So after that, 6 a.m., the high is going to be up here, right at this level. I'm not going to mark another level there because it's basically the same as a time-based liquidity level that's already been placed. Um, okay, so that would be the high between, take that back. Um, this is the 6 o'clock candle. So it started here, and that is going to be the high at the start of that candle. So I'm going to place the line there at 6 a.m. as the high, and then 7:30 is, this candle ends at 7:30. So the low of that session is going to be right here. Okay. Um, and then from 7:30 to 9 o'clock. All right. So 7:50 to 7:30, this starts the session right here at the end of this candle. So the high of that session, if I find the 9:15 to 9:30 candle, uh, is going to be down here. So this is going to be the high here between 7:30 and 9 o'clock. Okay. 8:45 to 9 o'clock candle. So that is that. The low is going to be down here at the lows. Okay. All right. So those are my liquidity levels. Now, if I decide to trade past 11 o'clock in the afternoon or 11 o'clock in the morning, I will mark out the 9:30 or 9 to 10:30 liquidity levels as well. Okay. Um, Now, I will trade pre-market. So some of these lines haven't been drawn yet, because I may be trading between 7 and 9:30, but I'm using my previously marked out levels from before 7 o'clock to kind of look at my trades, right? Um, and 7 o'clock starts here. Um, what am I looking at? Well, uh, I know we've got lows here that have been marked out. Well, so, so as soon as we come in at 7 o'clock and look at our computer, um, we're playing right in that area and we break the Asian low. Do we form a fair value gap? No, because the very next 15-minute candle comes up, closes the gap, but it can't close above these lows. So good indication that we are going lower. Um, and I was looking for the retest of this 4-hour inverted fair value gap anyway, right? Um, I was actually on the computer a little bit earlier, up in this area here, and we were fighting to break this low. We did finally break that low, but I didn't want to take the trade there because we hadn't taken liquidity from the Asian low yet. I was looking really for a break of this candle right here to enter the trade, which happened on this 15-minute candle that could retested the Asian low but couldn't hold it. It came back down and closed below this low. So that was my entry point, because at that point I know where the draw on liquidity is. It's this inverted fair value gap that we're going to go back and retest. All right, so I entered the trade at the close of this candle right here, and I was taking it down. Now, where was I looking, you know, where the market might reverse on me? Well, obviously we're back inside this inverted fair value gap, so it could really reverse at any time. But we do have this fair value, bullish fair value gap right here, um, inside the inverted fair value gap. Okay, so I was looking to see price. Turn my magnet off. I was looking for price to come back down to here. Okay, uh, and maybe grab liquidity from that bullish fair value gap. It didn't get there. It pulled back, it tried to go back down again, and basically what we did is we made a low, we swept that low, and started moving up. As soon as this candle, the second candle, forms this flat bottom reversal, which is where the bodies basically meet up perfectly. Um, it's just a little higher because it's price started a little higher, but it's basically equal. Um, that's when I closed the trade. Flat bottom and flat top reversals, uh, unless you're getting a very strong market push, will cause reactions or reversals at those points. Just like you see this flat top reversal here, price came back up to it, it stalled right at it, pulled back. The next candle went down and then finally pushed through it. Okay. So you're going to see either reaction, at least reactions, if not reversals at those areas. So that was my first trade of the day. It was not a huge trade, but it made a good little chunk of money on one contract to get my day started off with profits and give me a little bit of profits for the day to play with. Um, it's really early. I got up at like 4 o'clock this morning. And it's like 6:30. So, you know, um, basically, I was looking for the liquidity run, the break of time-based liquidity, which was the Asian low, and a continuation past it. And that's what we got. We broke it, retested it, and came down and closed. And I expected it to go even further, and it did. All right, so that is that. Now, on a liquidity run, um, I'm looking for confirmation. So I wouldn't take the trade here just because we broke and closed below this Asian low. I want to see that get retested and then rejected, then take the trade for the continuation down on a liquidity run. All right, a liquidity sweep is a little bit different. Um, so I'll show you that because we did have one later in the day for that. Now, once that was done, we have this big displacement, uh, which actually started at the London Open from here to here. Okay. Now there's a couple of sections in here. We had a couple, a consolidation, a pullback here and a consolidation here. And so for me, the strongest move of this long down run was from here to here, which is where there's no white candles, no up candles. It's all down candles. Okay. That is typically where I will place my fib retracement, uh, because now we've had displacement. I know we've come down and grabbed liquidity from this inverse fair value gap, and we're starting to move up. Okay. Um, and we don't get the true move up until we close above this candle right here. Because when we came down, we made a bearish fair value gap. Okay. That could be, possibly be respected um, and priced to continue further down, right? So looking at that, none of these candles through here, um, none of these candles, even though we were making higher lows, uh, closed above that fair value gap until this candle here. Okay. Um, so we inverted this bear fair value gap. Uh, that's where I start getting interested in a trade. Because now I know we have a true pullback starting. Okay. Until we break that fair value gap, we could just plummet lower um, into what I was looking for, but I was already out of the trade. So as soon as we do close above that inverted bull fair value gap on the 15-minute, I know that I actually have a pullback going. Where is my looking to enter a trade? Because we've had displacement down. I'm looking for a 6-2 retrace to end up going further down. Okay. Um, because at this moment the market is showing me that it's in a downtrend, and until it breaks that downtrend, I am looking for shorts. So where do I set my fib on that downtrend? This is where it gets a little subjective, but there is a way to uh, really look at it uh, and get some good confidence in it. Number one, like I said, my thought at the very beginning was, well, this is the strongest push down. So sellers really aren't going to want price to go above this area here. Um, so I initially set my fib. Oh, let me delete that. That was the wrong one. I initially set my fib at the start of that push down. Okay. And the reason I kind of went with that is that one, my target profit would be down here at the 2.7, which is where the original liquidity that I was looking for price to go get, which was this bull fair value gap inside the 4-hour inverted. Okay. Um, so I was looking to take a trade here at the 6.2 to go short. All right. And I did. I took a trade there. I took an entry there. Price then continued just to push up, and it went past the 7.9. And I had my stop up here above this high. Um, I didn't like to see this at all. Um, but once it passed the 7.9, I needed to look at something different to see if I was still right. So what I did is I grabbed my fib and I moved it to the next high, which is right here. Okay. Price then reversed at the 7.0. Okay. Now, even better, this would have been, a much better entry if I had used this, um, which is logical because we didn't, you know, we didn't have a pullback here. It was just consolidation. This was an actual pullback on the first down part of the leg, which means buyers tried to take control and sellers said, nope, here we go. All right. And then we got here and buyers tried to take control, but we didn't actually have a pullback. It was just consolidation before moving lower. So this was the better part of the movement to take, which would have given me a little better entry. I would have entered, at the top of these candles, and price wouldn't have scared me so much because basically stopped at the 7.0. We never went past the 7.9. Um, and started moving back down. Now, there's another way to look at it, whereas if you just take it and put it all the way at the top, then price actually didn't quite make the 6.2, but came close enough for me to enter a trade. And that would have been the best entry for the trade. Okay. Um, so this is where I'm saying it, it's a little subjective. So I basically got the worst entry price on the trade, which was right here. Um, and it never broke the high, so I didn't get stopped out, and we started coming down. And I was in profit. Again, the same thing happened. We came back down into this inverted fair value gap, and I wanted to see if it would get broken to come down to this target profit, but it pulled back. Then the next candle started to go down and again made a flat bottom reversal. So I was out of the trade. Okay. Um, I got out of the trade somewhere in this candle. Okay. Um, in this up candle. Yeah. Not a great profit. Um, but it was profit. So, um, and I actually did add to this trade once price moved up and didn't break the high. We pulled back down and closed here. I didn't add there. The next candle pushed up again, could not break the high, came back and closed. I still didn't take, uh, I still didn't add here because we had moved into this fair value gap, this bullish fair value gap, and rejected it and closed pretty close to above it. So that may have been, retest of the fair value gap to go higher. But I watched, and the next candle started to push up and then came down. As soon as we broke the low of this candle, I added a contract right there. And then, I didn't get a whole lot of profit on that add, but it did add to the profits of that trade. It was more profit than it would have been on just a single contract. So that's the fib retracement. Um, we couldn't break this inverted fair value gap, so I figured price was probably going to go higher. And at the end of this trade, between this trade and this trade, even though it wasn't a very large trade, um, I had made my money. I was up, uh, it's over $3,000. So I just closed my computer. Um, this was an Apex account. I made my money. I was done for the day. I wasn't going to trade anymore. Oh, excuse me. So I closed my computer. Then we had this big displacement up. I stopped for a lunch break, uh, and I opened up my computer, and uh, it was pretty much right around the time that we made this market structure shift on the 15-minute time frame. Okay. Which was also breaking a time-based liquidity level. Um, and it was 12:45. We're still in the lunch hour, uh, but uh, people say don't trade the lunch hour; it's just chop. Um, they are somewhat right, uh, but I, if price is showing me that uh, we have a trade available, then I'm going to take the trade because, I mean, we started the lunch hour right here, broke this high, and that's a pretty good displacement during lunch. That's not chop. Um, so when I saw this, I came back on. I was like, well, I'm not going to trade my Apex account because I already made my money there. So I opened up my FTT account, Fast Track Trading. Um, And now on these liquidity moves here, basically, this could be a sweep or this could be a run to go up and take out the London high, right? So I need to get confirmation on a smaller time frame on what's going on here. And this is when I moved to the 1 minute chart. So when I came over to my 1 minute chart, what did I see? Well, this candle here the candle they broke was 12:45 to 1 o'clock, right? So that's this area right here, this push up. And what I saw and what I'm looking for is signs that sellers take control here for a reversal, or buyers continue in control for a liquidity run to go higher and take out the London session. Uh, and I base that on the 1 minute chart. Okay. So what I see on the 1 minute chart when I come over into this area is we have this push up, and the very last push that breaks through liquidity, the liquidity level, forms this nice big fair value gap on the 1 minute, right? Uh, Bullish fair value gap from here to here, right? But what happens is once we get to the top, we get pretty much an immediate reversal, flat top reversal, okay? An immediate reversal, and it takes, 4 minutes, but we end up coming down and closing below this fair value gap. So we just inverted this fair value gap on the 1 minute chart. And to me, that is the sign of strength that I'm looking for. We get a strong push up with a nice big fair value gap on the way up, and we immediately reverse and inverse that fair value gap. So my entry is at the bottom of this 1 minute candle right here. And with that entry, um, when I take this trade here, I am just going to risk above that inverse fair value gap. Because if we're going to remain bearish, we should not break back through that seller strength that inverted that fair value gap. Okay. This would pretty much be a manipulation move. Actually, the sellers are the one that strongly pushed it up to get people in long, only to reverse price and bring it short and start stopping people out. Okay. Um, so that was my entry. Well, what am I looking at? Well, if I zoom out a little bit and I'm looking at the market maker model here, we started this push down here at this consolidation. We had two consolidation points before we made our move up here. Okay. So we could come back down to here, or we could stop at, any one of these points to come back down, right? So I take the trade and I look on the 15-minute chart, and what I see is this bull fair value gap right here. Okay. So, oops, um, let me throw so you can see between the charts what's going on here. Back to white. See the prices I'm looking at. Okay. So my entry is right here. Okay. And that's on basically the close of this 15-minute candle here. Okay. Um, so yeah, that's it. Okay. Right there. At 103. Right. So it wasn't the close. It was about halfway through that candle because we came down further and then pulled back a little bit before the candle closed. But that's my entry point is up here. When I look at the chart, this is a worry for me. It's a bull fair value gap. Okay. Um, so a couple of things have to happen. We have to come down and actually break through this fair value gap to continue lower uh, down to my target, which again, uh, because this is displacement, uh, what I'm going to do is on this we broke the high, we took liquidity from a high and a time-based liquidity, so I'm looking for a pullback to come to the 6.2 so that I can then go long to take out this high because we've changed market structure, okay, um, and now could possibly be going higher. Of course, this is later in the afternoon, so I know I don't have a whole lot of time for this. And on a 15-minute chart, uh, there's no way I'm probably going to get to the long position because where everything's located. So if I'm looking for the 6.2 for as a target profit, I'm going to throw my fib up from here to here, and this is where I want price to come down to. Well, we have these liquidity levels down here. Uh, that could be a possibility. And now I did not hold this trade waiting for the 6.2 all the way to 4 o'clock. This was a fairly quick trade uh, that I entered, got out of pretty quick. Okay. Uh, so what happened is I entered the trade at 1:02 in the afternoon. Um, then I held through all of this chop here. And then this almost stopped me out. When this candle formed, this last push up right here, I basically consigned myself to this being a losing trade uh, because my stop was just above the fair value gap. Okay. Um, so I pretty much just said, you know what, this is going to be a losing trade. That's okay. I should have just kept my profits from the morning and not came in and traded another account, right? So I didn't lose any profits. I just would have lost in Apex. I just would have lost money in my FTT account. Um, to the tune of about $500, which I'm perfectly okay with. I've got $15,000 of drawdown there, so um, wouldn't be worried about a $500 loss. But then the very next candle pushes down, and then I get a three down candle to bring us back into range, which gives me a little bit of hope. Um, and then we go to push up, we touch the fair value gap, and then we get this big, strong 1 minute down candle. When this candle happened, I closed pretty much at the bottom of this candle um, because I know on that strong of a move, the next thing that's going to happen is we're going to have a pullback. So I just went ahead and closed the trade. I tried to tick. I think I didn't get it at the very bottom. It came down and started to pull back because this is right around $1,000 at the bottom. And I tried to click quickly to grab that $1,000 real fast. Ended up closing the trade at like $939. Um, so, you know, I was happy with that. I didn't want to hold this trade any longer. I had already gone from 1 o'clock in the afternoon to 1:45. I was already in this trade for close to an hour, um, and just suffering through all of this, which takes, you know, a, a toll on your emotional state, um, and your mental capital. because this entire time, you're wanting to trust the trade, but at the same time, it's like, geez, let me take this off. Was this the manipulation move to go higher and I was wrong on the trade? Or, you know, you start thinking a lot. You start trying to second guess yourself. At the same time, you've got the other side of you going, just trust it, trust the trade. Uh, you know you're going to get a pullback off of this, you know, market structure shift and on this liquidity grab because you see the reversal. You've got the seller strength, um, and you just try to trust it. And when this came down and it broke this low, um, and this 1 minute candle was so forceful, I knew we were going to end up having a pullback off of this consolidation somewhere. And I just didn't want to go through any more second guessing myself. Close the trade for $1,000, be done with it. So that ended up making the end of my day and giving me like a 4.3K day overall across both accounts. So that's pretty much how I look for liquidity sweep entries is on the 1 minute chart, seeing, the last part of that sweep. I want to see a good fair value gap being made to the upside, a bull fair value gap that is pretty much immediately inverted. Um, within 5 to 10 minutes, I want to see this strong fair value gap inverted to say, okay, sellers are actually in control here. They're probably the ones that pushed it up there to get people in or to grab liquidity from this area somewhere and then manipulated price up only to bring it down further. So that's my entry model for uh, a liquidity sweep. Now, a liquidity run, what I would have looked for here uh, is for price to have come back and retested this fair value gap, being, we didn't make any fair value gaps through here. We haven't made any through here. We inverted a bullish or a bearish fair value gap here. So we have an inverted down here that we tested and then shot up. Well, what I would want to see is a retest of this fair value gap and then a rejection of it to go higher. And if we got that, then I would be looking at a liquidity run past this liquidity up to the next liquidity level. And I would have entered uh, probably as soon as we broke this high or waited for another bullish fair value gap and then the retest of it to enter to go up to the next liquidity level. So that's basically it, folks. That's how I trade. Uh, if I went too fast on any of that, go back and rewatch it. But I don't want to make this an extremely long video, so I'm going to cut it off here. Um, you know, we all pretty much have our own trading strategies. I'm not going to talk anybody into switching over to what I do, but we do have some new people in here as well that have just started their journey, and I wanted to show, how I look for my entries uh, and exits. So um, that is it. I hope everybody has a great Sunday. It is Sunday morning. I'm getting unloaded and then I'm taking a week off. So I will be online quite a bit the first part of the week. Towards the second part of the week, Thursday, my brother is coming down from Washington State down here to Florida, and we are going to go play golf on Friday at the World Golf Hall of Fame. And then on Saturday night, we are going to go to the NASCAR race at Daytona International Speedway. Um, so I probably won't be on much towards the end of the week. Probably will trade through Thursday because he's going to want to see me trade uh, and and watch what I do. So uh, probably trade Thursday, but definitely will not be trading Friday as I'll be out on the golf course Friday morning. um, and then enjoying the time with my brother. So we will see everybody tomorrow. Uh, I do have another video I got to make real quick for something interesting that I'm looking at. But this is just for, looking for my entries and exits. So have a great Sunday, everybody, and we'll see you soon.